now. Let's quickly get across to management that's sitting with us. It's on a company that's once again bullish on the power space, and the company is Metals Infra. The company is looking for acquisitions in the EPC space, and it currently provides equipment for hydro projects, and it's also developing the Pondicherry port. We're now joined by Mr. Vikas Kothari, who's Director Business Development at Metals Projects. Mr. Kothari, thank you so much for joining us. Give us a sense of really what kind of acquisitions are you looking out for?
Well, we are an engineering construction company specializing in hydromechanical equipment. We do turnkey contracts, and we are the market leaders in our space. So having been the market leader for a while now, we now need to grow and expand into different geographies and into different areas of businesses. So what we are looking at is to execute EPC contracts for hydromechanical equipments, alongside also do civil construction contracts. So we are looking at civil construction companies, medium size, in India or overseas, to acquire.
So 50 to 150 crores, is that the kind of price tag you're looking at?
Correct. Well, mid-sized civil construction companies, be it domestic or overseas, would be within that range. Especially overseas companies would be at within this range, because Indian companies would obviously be at a much larger valuation. So we are looking at organic and inorganic growth. Organic growth by venturing into civil construction for power projects, and inorganic growth by virtue of acquisition. So whichever opportunity comes up first is what we will be taking up.
Sure. So what kind of revenue growth are you looking for this year? And this whole acquisition that you want to do, what's the funding going to look like? Where's it going to come from?
We have a current order book, outstanding order book of close to about 650 crores, which is to be executed over the next 3 years in the hydromechanical engineering space. Therefore, we are expecting a phenomenal growth in our engineering revenues. From the current of 100 crores, we are expecting 170 crores, around 170 crores this year. FY 10 and 11, we are expecting to go beyond 240 crores in engineering revenues alone. Over and above this, we have real estate revenues also contributing, and the hotel and the multiplex that we are in. So they will also be contributing. So all in all, we are expecting a nearly 70 to 80% growth in FY 10 and almost 100% growth in FY 11. We are also expecting new orders to be added before March 10 in the engineering space. As far as our acquisition is concerned,
well, you're looking at the...
Yes. Yeah, go ahead, please.
Yeah, please go ahead.
With regards to our acquisition, since there's no clarity in terms of the target and the revenues from the target, there is not much that we are contemplating for this moment.
Sure. One quick word then on the Pondicherry port project, in which you are partnering with Subhash Projects. We just spoke to the management there. They said that environmental clearances can take a long time. Where do you see this headed? Are you expecting to divest any part of your stake in this project?
We have partnered with Subhash Projects as a 50-50 joint venture, and the company is called Pondicherry Port Limited. We intend to dilute our respective stakes in the Pondicherry port by bringing in a strategic partner at the right point in time, who will bring not only the technical but also managerial skills into the SPV. At the moment, there is not much there, because we are undergoing the environmental studies at the Pondicherry port, and this is a time-taking process. So until the environmental studies and environmental clearance is achieved, we don't intend to move any further on that at this point in time. The environment clearance should easily take about 6 to 9 months.
1 year down the line?
Excuse me?
1 year down the line, revenue and earnings estimates for us, please.
The engineering, as I said, that FY 11 will cross 240 crores, 250 crores. And as I told you, we have an outstanding order book of about 650 crores, and there will be new orders coming in close to about 200 to 300 crores before March. So all these put together, our outstanding order book as of March 10 will be more than 1,000 crores. With this order book, the same has to be executed over the next 2 to 3 years. So we are expecting 100% plus growth in our top line, only from the engineering business. The real estate business and the hotel and the multiplex will add further to the growth of our revenues.
Thank you so much for joining us this morning, and good luck with the growth prospects. And see what they want to do there. With that, it's a wrap on the mutual fund segment. Of course, we leave you with our ET classroom for today, where we tell you do there. With that, it's a wrap on the mutual fund segment. Of course, we leave you with our ET classroom for today, where we tell you what a value fund is. And of course, don't forget to write in your email us your queries at mutualfund@timesgroup.com. I will of course take your lead, but more market action, all those results coming up in just a little bit.